Chapter 2, Part 2. We're going to go over some more terminology that's very important for you to understand managerial accounting, and I also list all of these at the end of this presentation. You might want to print that out and save it. So, we've talked about, in Part 1, we talked about items 1 through 5, and now we're going to go through the rest of the list, which is direct versus indirect costs. Direct costs, again, which I discussed in Part 1, you can trace these directly through the objectives. So, if we were talking about a car, it would be the chassis, it would be the motor, it would be the upholstery, it would be the seats, because you could identify them directly to the product. Again, another example would be address. Now, indirect costs, they have something to do with the product. Like, for instance, if you rented a factory just to make a product, the factory would be associated with the product, but not directly. So we would call that an indirect cost. So, assigning direct and indirect costs to cost objectives. So, if we can trace it directly to the product, then we can assign it to an individual unit. If we can't, we have to allocate it. Again, we must follow GAAP for external reporting. We have product costs that are incurred by manufacturers to produce their products. These are normally treated as inventory until they're sold. And it includes direct labor, materials, and indirect costs. Period costs do not get treated as inventory. Instead, they're expensed immediately, and they're incurred in other functions of the value chain. They are called operating, selling, general, administrative expenses. Costs for internal decision making. Consider all costs incurred across the value chain. We have to look at total costs, but a lot of times we only look at specific costs. Must ensure price covers all costs. Now, prime versus conversion. Prime costs are considered direct materials and direct labor. Conversion costs, what we do is we take the labor and labor and direct materials and we make it into something, and we apply overhead and the labor, and that's considered the conversion. I don't know who comes up with these categories, but that's what we categorize them as. Now we have controllable versus uncontrollable costs. And what this really is variable versus fixed. So, if you have a controllable cost, management is able to influence or change it. Example would be number of employees. Uncontrollable costs are locked in the short run. Good example would be rent. Now we're going to talk about relevant versus irrelevant. And this is always important when you're trying to decide to do something, and it's a mistake a lot of people make. Relevant costs are the costs that are only the costs that change based on the alternatives. Irrelevant costs do not differ among the alternatives. Some costs are costs that have already been incurred and cannot be changed. For example, if you want to buy a new car for $20,000 and you can sell your old car for $5,000 that you originally paid $15,000 for, also you currently pay $100 a month for parking. The relevant costs are only the cost of the new car less what you can sell it for. Irrelevant costs are the parking, because you're going to pay that no matter what, and the sum cost, which is the $15,000, is irrelevant. So now let's take a look at an example. You've been offered two jobs. One pays $70,000, but it's close to home, and you can stay with your parents for a year. The other job offers further away, but you have to rent a place. I don't know where. You'd rent a place for $1,000 a month, but needless to say, maybe you're going to share a place with 5,000 other people. Food, utilities, and car maintenance. So let's take a look. What's the relevant information? It's the salary, the rent, the food, and utilities. It's not the car maintenance, because you're going to have to pay that no matter what. So that is irrelevant. So what's the difference? You either get $70,000 or $82,000 minus the cost, additional incremental cost of rent, food, and utilities. So the decision should be, now this assumes you get along with your parents. You should stay home. Now let's look at fixed versus variable costs. Now, a fixed cost is a cost that doesn't change over the relevant range. A good example would be, for the year, how much you pay for insurance. Variable costs change as we change volume. And an example would be how much you spend on gasoline, directly associated with how many miles you drive. Now, how manufacturing costs behave. Direct materials and direct labor are usually considered variable for all of our analysis. Manufacturing overhead includes a mixture of fixed and variable costs, and product cost, because of that, is always going to have a mixture of fixed and variable costs. Now, average versus marginal cost. Average cost, you just take the total cost divided by the units, and that gives you an average cost. We don't look normally at average cost. We have more of a tendency to look at marginal cost. It's the cost of making one more unit. And as we know, our variable cost will change if we make one more unit, but our fixed cost won't. And this is only true if the plant is not at 100% capacity, because then our fixed costs will change. So, for example, say you had variable costs of $100,000, fixed costs of $125,000 for a total cost of $225,000. That means, again, our variable change as production changes, but the fixed don't. So, you currently produce 10,000 units, and you are not at capacity, and you have an average cost of $22.50, and you sell them for $30. Now, what happens if someone comes to you, special order 1,000 units, and they'll pay you $20? Should you do it? Well, first of all, it can't be for many of your current customers, because then all they want to ever pay is $20. It has to be something really, someone you'd never deal with again. But if we only look at our incremental costs, i.e. our variable costs, the reality is it only costs us $10 to make additional units. So therefore, if it doesn't affect existing business, we make $10 profit. This is the list I was telling you about. These were all the words, and you need to understand what all these mean, because you're going to be using this in the rest of the book.